Hi, today is Tuesday the 19th and this is the weekly recap. Sorry it's a little late, I usually do it on a Monday morning, but I was kind of busy. So this is the November trade. Last week October expired, so that was actually a pretty good cycle. 2% on RegT and probably around 3% on my PM account. But that said, the November trade is not looking that great. I mean, it's safe, but it's not looking good. I overhedged, reducing the position when the market went down, so the P&L was pretty stable. And then I was hoping to get into a sweet spot scenario, and now the market has shot up. We are at 45.15 right now. And basically, either I write off or maybe I will do a little bit more. There's still 31 days, margin is controlled, so it's still okay. I mean, the CCS here is about 20 cents. Was 15 cents yesterday, so I'm monitoring it, but it is still pretty safe. And even if I project for maybe like 2 to 3 weeks, it's very unlikely it will go there. So I'm tempted to just let it die. And of course, last week I did a PCS roll and then a PCS yesterday to raise the expression line above water. It's not great, $67. I will probably do more, probably PCS rolls again. I can still get about $3 here, and I will probably lose a little bit if I move. You see 80 cents here, so I could probably get $200 pretty easily. But volatility is not that enticing at the moment. And also, I was trying to fight my negative theta. I did that on Friday, I did that yesterday. And I'm not going to just keep on adjusting just to get positive theta. At this point, I am doing nothing today, and maybe because the markets will be agitated, so there might be opportunities when the earnings are coming. We've got Netflix today, we've got Tesla on Thursday, and the big ones next week. I knew the market would be agitated. I certainly did not anticipate the market would rebound by 200 points or nearly 180 points in just a week. But that's what the market is giving us. I am not too worried. I can still get a fairly good credit here, and it will be okay. So let me show you what it would be like if I do something like this. As you can see, I get $300. That's okay. That's okay. I'm not using more capital. It's still stable. I can live with 21 Vega. I would have a little bit of theta. So that's something I will do maybe next time the market goes into profit taking. I'm definitely, if I do that, I'm definitely forgetting about the sweet spot scenario, but that's something I could do. I may actually do it more gradually. So on November, it's not going to be a great month. That's what it is. December has held a little bit better, although it's losing a bit today, 281. My delta is still -4. Here I should be maybe a little bit more concerned because the CCS are priced at $1.10, which is more or less what I got as a credit. But I would probably wait until the market gets to 45.30, which is the next big resistance, or all-time high is around 45.60 or so. So if the market really goes very much up, yes, I will do something. Probably will just roll them. It could actually be even part of a risk reversal by getting a credit from pulling an upper long or something. Here we've got about a little less than $3 credit. I'm only using 12K here, so there's really no problem with capital control. And if the market drops, this one, it would be looking pretty good. And at this point, I'm securing about 250. I can probably get to 400 very easily without compromising my sweet spot scenario if the market goes into retracement. And yes, I could also maybe reduce the call side, but that's still okay. At this point, nothing much to do. We're just going to have to wait for the storm when earnings come, and then FOMC early next week. This one has 59 days, so that's why I'm not too worried. And I actually haven't done much on this one. As you can see, I started opportunistically when the market dropped with 2 broken butterflies pretty early. Then I added the call side, then I added a third one, I did a fourth one, I did a fifth one. Technically, with 5 broken butterflies, this is a good looking regular size position. I don't really need to add more, but it doesn't mean that I won't, because yes, this market forces us to be a little bit more creative, so there could be 6 instead of 5. But I would say at this point, I will probably do at some point a risk reversal, and that would be either PCS or PCS roll, and just rolling the call credit spreads one notch up. The delta is still very low. Probability of reaching over maybe even the next 30 days. See, it's still these CCS are still safe though. So probably not much to do. I'm still hoping that the market will go into some profit taking the FOMO, the bull momentum with upcoming earnings is just a little bit too crazy. Best is probably to sit tight and do as little as possible on this trade. Right, that is it for now. There's not much to say. This is kind of boring. It is safe enough not to be stressed, but it's kind of boring and frustrating in terms of profit. But I'm still confident that this one can get to my 2%. November is going to be more difficult. I may get 1%. But again, we have to be a bit more opportunistic, like I was yesterday when I added a PCS on November. Okay, as usual, more updates and more info on Slack, so please join the Rhino Slack if you're not there already. Thank you for watching, and bye for now.